Thank you, Mr. Chairman, and I appreciate you holding this hearing. I think back, I've been on the committee for a long time now, and when we used to look at the non-bank sector, we thought about it in on the commercial sense, and asset-backed securities, CDOs, repos, and there were some benefits there. But then when we saw in the financial crisis, they were also the source of a lot of economic meltdown. We've seen since the financial crisis, and I think it's not really been, and it's one of the reasons why I appreciate you holding this hearing, is that we've seen now a migration in the non-regulated part of the financial industry, a massive amount of new consumer products come up in this area. Matter of fact, bank share of mortgage originations fell from 91% to 32%. The share of small business loans and unsecured loans dropped by 10% from the regulated industries. And we've seen this in a whole host of new areas. We've spent some time, I think I've still got to get more education on issues like crypto, but we've seen specialized fintechs, peer-to-peer networks, frankly, some of the big tech firms getting into the payment space. And some of these things bring real benefits, but I think we focus sometimes on almost exclusively on the benefits and not on some of the challenges. The truth is, I think there are reasons that we have regulated financial institutions, and with that regulation, while there are burdens, there also comes, I think, some benefits. I'm going to start again with you, Ms. Gittleman. Your testimony states that new products are, quote unquote, exploding across consumer markets. How should we keep an eye on these new products, recognizing a lot of consumers like them, don't care whether it comes from a regulated entity or non-regulated entity? But my concern is, how do we make sure that we are guarding the protections for the consumers in this non-regulated banking sector?
Thank you for the question, Senator Warner. We have federal and state regulators, right? And regulation and oversight of markets benefits everyone, right? There is more competition. Regulated entities have a clearer expectation of what is allowed and what's permitted, and consumers benefit from being protected and knowing that they are protected. We've appreciated the CFPB's inquiry into BNPL providers, and we look forward to seeing what research that they found. But we would also encourage them to supervise, the fintech lenders that we are talking about today, right? Under various different authorities that I can get into and that are in my written testimony. But we would encourage them to supervise each of these industries so that consumers are protected and that the regulated entities, have a very clear sense of what is permitted.
Let me, I know I was a big advocate a number of years back of more experimentation in the fintech sector. And I know there was probably some disagreement even on my side of the aisle about when OCC was talking about kind of voluntary charters and some critique of that would be almost regulation light. I personally think we may be able to revisit that because at least it sweeps some of these entities into some regulatory structure. I fear that the kind of, whether it be CFPB or this hodgepodge of state regulations, doesn't give the clarity that we need. And I'd like to, basically, the rest of the panel to address from your organization's standpoint, with the proliferation of these new products. And again, consumers probably not caring at the end of the day whether it's a fintech, a bank, a credit union. They just want to get the products. But how do we make sure that we put some framework around this? And it's very nice to see you, Ms. Lee, in your new role. And I'd love to hear from the rest of the panel on that subject.
Good to see you, Senator. And on that subject, I would say that there's kind of, with the products that we're talking about here today in particular, but larger, there's three different ways. One is to enter into state agreements with money transfer licenses, and that would put them in, once they are licensed, and they are also under examination for the abilities of which they do, which is on the money transfer. They can enter into bank fintech partnerships. When they enter into bank fintech partnerships, they are subject to the oversight of the state and federal banking systems. They own overdraft and other things, and to ensure their fairness and safety and soundness. And then third, to your point, they can go pursue their own charter, their own banking charter, whether that be through the OCC, through an ILC, or through other means. And I would say many of our member companies seek that. Unfortunately, there's not necessarily been a moratorium, but there's been a very slow acceptance of having special purpose or other types of national bank charters. Many fintech companies are asking to be in that in a more regulated space to be able to fit the purpose of what they're trying to accomplish. We would welcome the opportunity for the various different regulatory bodies to be able to approve those, so that you can have a fullness and an understanding of what these partnerships look like.
The other panel members could quickly address that.
Thank you. I'll be brief. Thank you for that question. I agree. It's a big problem, the hodgepodge of state regulations when it comes to fintech. Fintech only really works on a national basis, right, to make the economics work. As the chairman of the CFPB task force, I think somewhat controversially, we recommended that the CFPB be given chartering authority for non-bank financial services institutions. I believe the OCC fintech charter could work. I also fear that if the OCC is in charge, that the big banks will co-opt the process to impose unnecessary burdens on them. And so I would suggest considering something like the CFPB be given the authority to charter non-depository consumer financial providers.
Thank you, Senator. You asked what frameworks apply, and I'd suggest that in most cases we have the frameworks, right? These products are credit, as Ms. Gittleman testified to, and we shouldn't allow the fact that they're dressed up in fintech terms or sometimes bound up with the employment relationship to alter our perspective on that critical point.
I would simply, I know I expired, Mr. Chairman, but I've also been looking at the question. There's a lot of ancillary products that are kind of sold into the regulatory industry, and there's actually an affiliation of regulators that look at how those products are sold in. That might be an area I can learn a lot more about, but it might be another framework, because I am, we're talking about consumer protections here. We could make the same kind of question about cyber protections in this area, and the idea of this whole sector going without any framework of oversight. I frankly don't think the hodgepodge state regulatory system is going to meet the mark, but appreciate you holding the hearing.